In today's video, I am sharing information on the credit scoring models FICO and Vantagescore. I will share what they are, the factors that affect each of the models, and why your scores may differ. So FICO versus Vantage, which is better? Hello, friends. If this is your first time here, welcome. If you are returning, welcome back. In this space, we share practical tips, realistic strategies, and workable solutions that lead to financial freedom. So I'm glad to have you here. So FICO was developed in partnership with Fair Isaacson Company, which is an independent company from the credit bureaus. I won't go into the history of it, but it's very interesting, a very interesting history, and it's tied back to Equifax. In any case, FICO is used by about 90% of creditors. That means not all creditors use FICO. There are 5 components to the FICO model, and let me share that with you. 35% on-time payments, 30% counts as utilization. So if you are looking at your score, know that 35% of that comes from on-time payments. 30% of that comes from utilization, meaning how well are you using the credit that you have? If you have $1,000 in credit, are you using $900? In that case, you have 90% utilization. My suggestion is that you keep your utilization under 10%. Length of credit history. How long have you established credit? Credit mix. Do you have installment loans? Do you have revolving credit? What kinds of loans, what kinds of credit do you have? They're looking for a nice mix of credit. 10% of your score comes from having a nice mix of credit. And then there is credit inquiries. This is measuring how much are you looking for credit. 10% of your score comes from that. Now, for FICO gives you a 45-day window for you to search for credit. And each of those, depending on how you do it, each of those could count as one search. VantageScore gives you 14 days. So if you say you want to search on day 1, you want to go to Ford and look for a car and have them pull your credit. On day 5, you go to Nissan and you have them pull your credit. At the end of that 14-day period, that's counted as one hit on your credit. So you want to keep those hits, you want to cluster them and keep them as close together as possible. And then again with FICO, depending on the type of credit that you're looking for, even if you cluster it, it still may count as more than one credit hit. And I'll go into more details in that in another video. But for now, I just want to really give you a good overview of the FICO and VantageScore models and why your scores may be different when you look at them. So again, for FICO, those are the 5 components, and the range is from 300 to 850. Right now, the most popular FICO score that's being used is FICO 8. There's also FICO 10, and I'm going to go into a little bit about the different types of FICO score. So when your credit is pulled, you really need to know which one are you getting. Are you getting FICO 8? Are you getting an older FICO model? Because if you are, your score, even if it's coming from the same company, the same credit bureau, may be different because your FICO model that they're using is different. So these are things that it helps to know. So when people are saying, oh, my score is wrong, or this scoring model is better than this scoring model, you really have to understand which ones you're looking at to make that determination. Before I go into a little bit about the VantageScore, I want to invite you, if you have not already, to like this video, to comment, and subscribe. If you see the red button, that means you haven't subscribed. So if you would do that for me, what it does, it sends a message to the YouTube algorithm that somebody is in here engaging with the content, and YouTube will push that content out to more people. So if you're enjoying it, I'm sure somebody else will. If you gotten some education from this, some information that's helped you in your financial journey, then I'm sure somebody else will. So let's dive into VantageScore. VantageScore is a partnership between the three credit bureaus. So they came together and they decided to create a score that can compete with FICO. And they really wanted to get a score that's more representative of the current financial landscape, because FICO tends to be a little bit antiquated. And I'll go into that a little bit towards the end. VantageScore is used by a smaller number of creditors, typically car dealers and credit card companies, because pulling the VantageScore is a little bit cheaper. So you usually a smaller number of creditors will use it, and those are typically car dealers, credit card companies. There are also 5 components to the VantageScore, and this is one of the things where people will say Vantage is not correct, but you have to understand the components of the VantageScore and how they are weighted. So let me share with you the VantageScore. The VantageScore is made up of these 5 components: total credit usage, balance, and available credit. They don't give a percentage, but they do say it's extremely influential. This section here is extremely influential. And that is simply your credit utilization. How are you using your credit? What balance do you have? What available credit do you have? That's the credit utilization. Credit mix and experience, they consider that highly influential. So what types of credit do you have, and how are you using that credit? Payment history is considered moderately influential. New accounts opened, less influential. Age of credit history, less influential. So of course, this is the way the VantageScore is weighted. So I'm going to go back and forth between Vantage and FICO so you can see that it's not that the VantageScore is wrong or the FICO score is wrong in how it's weighted. It's just what's there. That's the component. So for VantageScore, total credit usage, balance, and available credit is extremely influential. That's credit utilization. So let's look at FICO. FICO says utilization is 30% of their scoring model. So let's go back to Vantage. Credit mix and experience, highly influential. What does FICO say? Credit mix is only 10% of your FICO score. Vantage says your payment history is moderately influential. What does FICO say? FICO says your on-time payments is very, very important. It's 35%. New accounts open is less influential, and FICO is in agreement because credit inquiries, 10%. Age of credit history here is less influential under VantageScore, but FICO says it's 15%. So it's really weighting it about moderately influential. So you can see the differences in how the models are composed and how the various components are weighted. That should help you understand when you're looking at your scores, why one score differs from another. Now, I'm going to go into some other things that would possibly make the scores different from each other. We talked a little bit about FICO 8 and FICO 10. Those are the models that are, FICO 8 is more common, but now FICO 10 is a newer model. And FICO is even going towards one that's called Ultra FICO, where they're now going to be taking into consideration your checking, savings, and money market accounts. So when you look at your scores, you may want to find out what model they're using. I mean, there's the bank card model. There are just different types of scoring models that's being used. The mortgage company may come up with their own scoring model using the base FICO or the base VantageScore. They're coming up with their own scoring model. So it helps us to understand which ones, before we start saying this one is better than the other, which one is your creditor going to be using and how are they using it? Now, the VantageScore, VantageScore 3 and VantageScore 4, they are the newer ones, and VantageScore 3 is used more often than VantageScore 4. And the FICO 8, the FICO 10, VantageScore 3, VantageScore 4, those are all, again, weighted from, or the score goes from 300 to 850. So when you're looking at your score, please consider all of these things. Each bureau may also have a different score for some other reasons. You have to consider your creditor. If your creditor reports your auto loan to Equifax, but not to Experian and TransUnion, then your score is going to differ between those credit bureaus because it doesn't show all the information in all of the credit bureaus. If you've already paid off a debt and it's showing on one credit bureau's reporting, but not on the other two, then that's going to impact your score. And that is why it is so important for you to pull your credit reports and compare them across credit bureaus. Because of COVID, we can now get a free credit report once per week. And that is through, I want to say July of next year, July of 2022, that you can get a free credit report every week. So you want to pull your credit report, you want to compare, and if there's something that is on one and not on the others, then you want to get it reported. You want to contact your creditor and have them report that. Or if it's something that is reported that should not be, then you want to get that fixed. Whatever it is that's on your credit report that should be, that's not there, or it shouldn't be and it's there, you want to fix it accordingly. Another thing to consider is that the credit bureaus do not scrub your data. The credit bureaus do not scrub your data. Whatever your creditor reports to the credit bureau, that's what's on your credit report. So if somebody reports that you were late with a payment that you were not late on, it's going to be on the report, your credit bureau's report, and that's what's going to affect your credit score. So again, another reason for you to pull your credit report on a regular basis. And that's one of the reasons why we file credit report disputes, because the credit bureaus don't care about scrubbing your data. They care about compiling that data and selling it to creditors so that creditors can offer you, credit. And another thing to consider is sometimes when you get those pre-approved offers, it's really coming because the credit bureau, the creditor has pulled your credit from the various credit bureaus. So typically they will pull the VantageScore because it's a little bit cheaper for them to get from the credit bureaus. So typically the offer they may make you comes from them pulling your VantageScore, whichever one they pull, and they make you that offer. And then when you accept the offer, you might find that you get less credit, whatever credit amount they give you is less, because when they do the actual pulling of your credit, they may be using FICO, which may be a higher score. So, Vantage could be higher, FICO could be higher, again, depending on those components I talked about before, depending on how they are weighted in the scoring model. Another thing to consider is if you have a mortgage that you just got, for example, and it was reported to TransUnion and it was not reported to Equifax, then TransUnion is going to show you a nice high credit score, but Equifax is not going to show that. So when it finally does get reported, then you have a shift in Equifax. So keep those things in mind, because people say, oh, I lost so much off my credit report, my credit score, or my credit score went up or down or whatever. You have to consider the weighting, and remember that this is an algorithm that's calculating the scores. So when that number goes in and it touches that computer model, the computer model doesn't care or not thinking about, is this something that should have been reported 10 years ago, or, not 10, but it is something that should have been reported a year ago, but it's now reporting. It doesn't care about all of that. It's gotten new information, and the algorithm is going to behave accordingly. I just paid off one of my student loans and my score dropped my Vantage score dropped 9 points. Now, I'm not concerned because I know it's going to come back up. But these are the things that happen because now the algorithm sees that an account was closed. Closed account can be a positive or a negative, depending on, how the account was closed. Was it closed because of a charge off? How was it closed? The algorithm doesn't see that. So until it matures in the algorithm, it's going to show that there was a dip in my score. Eventually, it's going to come back up. So it's not a matter of whether FICO is better or Vantage is better. You have to consider the components, how they're weighted, the accuracy of the data at the credit bureaus, which iteration is being pulled within each scoring model, FICO 8, FICO 10, Vantage 3, Vantage 4. And keep in mind that Vantage is gaining traction in usage. It has been increasing in usage every year, but FICO is more well-known and is used more frequently. So when you're looking at your credit score, you want to find out which score that creditor is using to determine how much credit or what kind of credit to advance to you. So I'm going to be linking a video up here. It's going to be 2 videos that has a little bit more information on credit scores that I did when I first started YouTube channel. So I want you to take a look at those for more information. And of course, if you have any questions, please contact me. I am also going to be going into more depth in FICO and some other factors in FICO and Vantagescore that may help you understand when you're looking at your credit scores and help you understand how to properly increase your credit score. So thank you so much. And I hope that this has been useful for you. And don't forget to check that video that I'm going to be linking up here. Until then, have a wonderful day.